You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so it's definitely time for an update on our XRP prediction video. Turns out that everybody that was shouting for the moon obviously was wrong, and the market did provide a retracement exactly as we expected. So now it's time to make an update on my previous XRP prediction and see where is the next opportunity for this market. Now, as usual, I will keep the analysis as educational as possible. We will first be covering the technical side of this market. Then we will go and see what we have from a COT perspective, so commitment of traders, specifically what hedge funds are doing in the market, so the non-commercials in the market, which are the biggest speculators, and we will be checking how their orders are changing on BTC USD, because obviously it is the market leader when it comes to cryptos. And then by the end of the video, you will know what kind of opportunity we can be looking for XRP USD and what kind of situation you can expect given the current market structure and order flow. So without further ado, let's get straight in the video. Now, starting here from the monthly time frame, what we can see. Now, from a monthly perspective, we can see that before starting the massive move to the upside, the market had provided a quite nice W formation. Now, generally speaking, when you see a W formation in the market, what you expect is for the market to go and complete the pattern at the neckline, which is the previous resistance, now turn support. And after the completion, you expect the market to create the continuation to the upside, to complete the impulse correction and impulse pattern to the upside. So from a monthly perspective, the market has completed the pattern exactly as we wanted to see and created the continuation to the upside. Now, in this specific case, there was even more confluence. In fact, after an impulse to the upside, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if you take your Fibonacci from this low to this high, what we can see is that the market has retraced exactly to the 0.618 of the Fibonacci taken on the impulse, which is a very strong supported zone. In fact, most of the times when the market retraces all the way down to the 0.618, from there, you do expect the market to provide the continuation to the upside. And in this specific case, we had even more confirmations for this move to the upside. In fact, the market retraced exactly to the 0.618, which was in confluence with the previous resistance, now turn support, creating a confluence of support area from which we definitely expected the market to create this move to the upside and massive rejection, exactly as the market has done. In fact, I had also made a full breakdown of XRP USD when the market was here, explaining all the reasons for which from here we wanted to see this move to the upside. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in description so you can go and check it out for further reference and more free education. After that, what did we have? We had a massive impulse to the upside. And after this massive impulse, I made another breakdown explaining all the reasons for which we wanted to see a deeper retracement, which is again exactly what the market did. And I will link also this previous analysis in description. But now that we have the impulse and correction, how is the market developing on the lower time frames? Well, going down on the weekly, what we can see is that after the initial accumulation phase that the market created here, from which we definitely wanted to see this move to the upside, the market has created now the impulse and correction that we wanted to see. Now, as we have already seen from a monthly perspective, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from this low to this high, what we can see is that currently we have another 0.618 Fibonacci retracement, which again is the golden ratio from which we definitely do expect a rejection to the upside, which is what the market has already started. The market has already started rejecting exactly the 0.618 of the Fibonacci taken on the weekly impulse, which is exactly what you expect in this kind of situations. Now, it will be very important to see the shape that this weekly candle will actually close in. Because when you see a candle like this, what you expect is the next candle to fill in the wick. Now, don't get me wrong, we still have 4 days and 9 hours to go before this weekly candle will close. But if this weekly candle will close red with a long wick like this, and the wick is more than the size of the body, you expect the next candle to go for another test of the 0.618, basically filling in the wick that we have from a weekly perspective. This is a pattern that I have spoken about many times, and the market continuously completes this pattern. Going down on the daily time frame, what do we have? Now, from a daily perspective, this is where things get very interesting. Now, from a daily perspective, we had spoken about XRP USD exactly after this impulse and correction. Exactly when the market was here, I made a full breakdown explaining all the reasons for which from here we wanted to see this move to the upside, and that is exactly what the market did. And then I spoke about XRP USD in our previous analysis when the market was at this zone here above this support, and I explained all the reasons for which, if the market would have broken below this support, after a break on the retest, we could be looking for the continuation to the downside. And again, that is exactly what the market did, and I will link both this previous analysis in description so you can go and check them out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, this has also a lot to do with fundamentals. The way in which XRP is moving has a lot to do with the fundamentals that there are behind it. Obviously here, all the bull run was because of the release of the Spark tokens. So obviously we did expect this move to the upside, the increase in demand coming from the possibility of having free tokens. Obviously everybody wants them. So there was a lot of buying pressure, but then after the release, obviously a lot of people started selling them, started selling XRP because they didn't need it anymore and they weren't interested in a long-term investment in the project. So what they decided to do, they decided to dump XRP USD, which is exactly what we said in our previous video that was very possible, and that is in fact exactly what the market did. Now, from a technical perspective, what we know here on the daily is that in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here. Now, this green candle is a strong area of structure because in this move to the downside, as we have just said, is the only candle not related to the move. So it is an area of previous support, which is now turned resistance. So how we will be approaching the situation, a situation in which we still don't know how the market will fill in the wick that we have on the weekly, depending on whether or not we will actually have that pattern, and a market that from a daily perspective is currently approaching resistance and has actually already tested and rejected quite strong resistance, but has also just rejected the 0.618 of the Fibonacci taken on the weekly. Well, before I show you what kind of situation we have, let's first go and see what we have from a COT perspective on BTC, specifically BTC USD. Why do I say BTC USD if we're just checking the data for BTC? Because all currencies on the spot are traded against the USD. Obviously, this is a cryptocurrency, but anyway, it is traded against the USD on the spot. Therefore, if you're checking the data for BTC, you are actually already checking the data for BTC USD. And we can see that lately, with the last report, we had a more longs closed than shorts, with BTC USD at the all-time highs zone, from which we can expect a retracement. And if BTC USD will start a move to the downside, XRP USD should follow since they are highly correlated. So how we will be approaching this kind of situation with students? Now, what we know is that the weekly time frame still hasn't closed. And we know that overall, we would like to see the market try to create another move to the upside, because as we know, after an impulse and a correction, we expect the market at least to try to create the continuation to the upside. But at the same time, we also know that on the daily, we have resistance, and on the weekly, we could easily have the candle, which the next one is supposed to fill in the wick. So the best way to approach a situation like this is, as usual, being reactive and not predictive. And that is, in general, a concept that applies very well in trading if you want to always find the best probabilities and have a clear rule-based strategy that you're always following. And the best probabilities always come when all time frames are aligning. And in this case, all time frames are not aligning because the weekly has a bullish pattern from an impulse and correction perspective. However, it has a bearish candlestick formation if the weekly candle will close in this shape and the daily time frame has resistance, but overall the pattern on the weekly is bullish. So obviously timeframes are not aligning, but there is an easy way in which timeframes can be aligning, and everything will be clear once this weekly candle will close. Now, if this weekly candle will close with this shape, then what we can expect is for the market to actually reject quite aggressively this daily resistance. So if on the weekly time frame we will have a bearish close of that candle, so creating the candle that the next one is supposed to fill in the wick, then inside of this area, what we will be doing with students is monitoring price actions from a 4-hour perspective. Why 4 hours? Because monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So if everything will remain bearish on the weekly, inside of this area with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and rejection of the daily resistance. On the other side, if this weekly candle will actually close green, we have high probabilities that the market will have at that point broken above this resistance. And as you know, in the market, an area of resistance, once it is broken to the upside, is turned support, which means that that weekly candle will close green because the market has broken above this resistance. If that would be the case, this resistance at that point will be turned support. So after the break, on the retest, at that point, we have bullish structure on the daily and bullish patterns on the weekly. Therefore, we do expect the continuation to the upside. So after the break, on the retest inside of this area, this is again where we will be monitoring price action from a 4-hour perspective with students. But in this case, we will be looking for the market to provide to us one of our valid entries for a longing opportunity. And as soon as the market will do that, we will be taking a nice long with a very good probability and very good risk to reward at that point for the move to the upside. So it's just a matter of waiting how this weekly candle will actually close and how the market will react to this structure. If the candle on the weekly remains bearish, inside of here we can be looking for a shorting opportunity. If the weekly candle will become green and close green and the daily time frame will break above this resistance, at that point on the retest, we can be looking for a longing opportunity. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.